Welcome everyone to our presentation today on the Critical Minerals Group. We've got a 30-minute time slot here for us to work through a presentation, and then, as Stuart said, we've got a time at the end for some questions. Let me just minimise that so you can see the presentation. Again, before we start, I'd just like to acknowledge the traditional owners on the country we work. That will be in numerous locations at Linfield, in Logan and just outside of Brisbane, where our electrolyte facility, and obviously, as I talk to you about the new strategy, where battery energy systems will be implemented. Without further ado, I'm going to jump in. Structure of today, I'd just like to take you through a little bit of a highlight section and then talk about each element of the business. You would have seen throughout the week a release, as Stu said, a release of a revised, I suppose, expanded strategy for Critical Mineral Group, as well as a deck that gives you more substance and I suppose detail around the business and how we're looking at it, and some of the future plans for us. But the structure is, I'll take you through that presentation, and at the end you can ask questions around the detail behind that. But I want to start by, I suppose, mentioning, I want you to take away a few key messages out of today. Today is an acknowledgement that we are broadening our strategy into battery energy system solutions. So that is vanadium flow batteries installed in customer applications. And why are we doing that? Some key points. We are trying to balance the supply-demand dynamic as part of that, and that is making sure we are in control and can see the demand coming through, and that is defining and pulling our growth. We're prioritising early cash flow. The BESS application is downstream application. Sorry? No, I haven't done that yet. Sorry, I was just getting some clarity. Prioritising the risk cash flow and ensure we're managing risk along the way. And the third point there is really protecting shareholder investment whilst enabling demand-led growth. So that's the first key takeaway. The second key takeaway is we are very well established in establishing our supply chain, and I'll take you through that. And the last thing here is that through an integrated supply chain that we're establishing and working through over the coming period, but over the next few years, we can see the capital cost of vanadium flow batteries, which are the rhetoric in market is they're relatively high cost, but we can see that cost plummeting as we introduce a supply chain into the market and reduce the overall cost of storage. So without that, I'll take you through the presentation. Just a small disclaimer, which I'm sure you've read. I'm not a financial advisor, so I'll let you to read that in your own time. So here is the diagrammatic of what I've just been explaining, which is we are focused on energy storage solutions, really leveraging what we've got in a great resource in our pentoxide production and electrolyte manufacturing, but taking it one step further to battery energy storage system solutions. And that is installed vanadium batteries, as I said, on the ground to customers for load applications. I'll talk to you about the detail of what they look like through the pres. It is essentially our strategy, which is around upstream supply security. And by that I mean with our own production of pentoxide, with our own manufacture of vanadium electrolyte, we're securing our own source of supply to deliver our value downstream. And that is the install of vanadium batteries on the ground to customers through that integrated supply chain. And we do see the third part of that strategy being some terrific ESG outcomes as part of the delivery of that overall strategy. Some key highlights that you would have seen some of those in the past in recent presentations, but just to highlight and cover those again. We do have a world-class asset, and by that I talk about the Linfield project in Julia Creek as a resource. It is a large resource. As a grade, it is a high grade, and more importantly, the ability for that resource to be processed is significant. We have an ability to recover a significant amount of the vanadium out of that in through our flow sheet. And some recent developments in just optimizing that flow sheet have been absolutely terrific. The recovery we're getting is in excess of what we saw in the scoping study, and it's now working through pilot study. And we're very excited about the prospects there. The diversification of our income streams, again, through whether that be the sale of pentoxide, the sale of vanadium electrolyte, and now introduced the delivery of battery energy storage systems. And I'll talk about how that cash flow is generated through that. The near-term cash flow, again, so through battery energy solutions, as part of delivering that, the very first step is scoping study, consulting work to actually assess particular load requirements, whether that's in for a data center or a remote community. We look at the load requirements and do a study and can generate some early cash flow through studies and that. But obviously then the manufacturing of electrolyte into those batteries, which we're looking at in 2026, will assist in some cash flow to the business. We have strong strategic partners. We know that Idemitsu is a terrific supporter in a major shareholder in Critical Mineral Group. The state government has provided funding, the federal government has provided funding, and the local council actually has incentivised us in Logan as well with some cash to the business. We have growing partnerships with hardware and software manufacturing for the downstream business, and looking to form some of those agreements and license agreements in the coming months. And we do see growing market tailwinds that are across the globe with various installations of flow batteries, but we're also seeing some specific targets being set through AEMO, our regulator, in Australia around long duration batteries, not only renewable targets, but the long duration nature of that storage, which is very suited to the vanadium flow battery. So what have we achieved with very little in the last 12 months or 6 to 12 months? We've done a lot. Very proud of what the team's been able to achieve and where we've got ourselves to today. But just to touch on a few, we have increased our resource up to 700 million tonnes. We have been granted the state and federal grants, which sort of help the cash flow into the business to the tune of around 4.8 million. We've expanded our EPM with 2 more tenements secured. The vanadium electrolyte manufacturing has kicked off this year. The pilot plant for the Linfield process flow sheet, which is a larger scale test work, is going exceptionally well and is about 50-60% on the way through. We applied at the end of last year for a coordinated project status, and we should in the next very short period be announced as a coordinated project, and that's terrific. And again, we've done a lot of work understanding the energy market in Australia and the opportunities presented to push and develop our BESS business strategy. So what have 2025 got in store for us? Again, a lot of work to do, but some big milestones I think will be achieved in no sort of particular order. Again, we'll finish off the pilot plant work. We'll complete a pre-feasibility study, and with all success, hopefully coming out of that, a bankable feasibility study by the end of the year as a target, or early into 2026. The vanadium electrolyte manufacturing facility, which is in its current feed stage or design stage, hopefully by the end of the year. Well, our target is to be commissioning at the end of this year and in operations in Q1 in 2026. And again, the coordinated project status early in this year. We have also started to talk to ARENA and the Quad about larger funding opportunities, grant funding opportunities for the install of vanadium batteries in sort of applications, whether that be remote communities, mines, or data centers or other applications, which I'll talk you through in a little bit. So there's a lot coming for us this year, and some exciting milestones that I think will really generate some increase in value. Some of this you would have seen certainly from previous decks. The market tailwinds across the world are growing. There is no slowing in those. If anything, there is a slight uptick. Just recently, there was a 175 megawatt, 700 megawatt hour battery announced in the Dalian region, built by Ronchi. That is the largest battery in the world. You will see Australia, as I said before, really starting to pull out long duration storage as a key target. In our conversation with Arena just recently, they're really focused on long duration battery storage, and they understand the I suppose the rigidity and the technology of vanadium flow batteries, which is very well known and very well understood, and satisfies them in terms of a technology. So that's great. You'll see some targets. By 2050, 88, almost 90% of the long duration, of storage will be long duration, very suited to batteries. I just pull out a particular case study here, which is New South Wales alone, and this is by 2030. Just to sort of draw your attention to the volume and quantum here. The New South Wales has dictated that we'll need long duration storage, about 2 gigawatt, 16 gigawatt hours, so 8-hour battery duration storage. Now, Lindfield, if we produce at a 4 million tonne per annum rate, will make approximately 1 gigawatt hour per year, a little bit over 1 gigawatt hour per year. So it's a significant demand that New South Wales is requiring. If I put that 1 gigawatt hour per year into vanadium electrolyte quantities, it's about 700 million litres, which is huge. We are building a 1 million litre facility in Logan at the moment, so obviously lots of demand will be coming through some of these dictated targets set by the states and federally. But we've gone one step further, and all the dots here will show you representation of what we've done around identifying CMG's target customers. So we've not only looked at the market and where the opportunities are, but we know the characteristics of these batteries, and we know where they are suited. So we've identified it. We've used some AI technology out there that's very helpful to identify where we see either transformers under load that need battery support, or we need load balancing and for grid resilience, or we see solar farms out there that are on their own that need battery storage to improve their overall efficiency, or data centers out there that need battery storage for that continuous power, or remote communities just sitting on diesel power that would benefit for solar and batteries. So identifying the customer base is very important for us, and we've certainly got a few customers that we're talking to about at the moment about opportunities. So I'm going to take you through sort of bits and pieces, the three parts of the business here, but very clearly we are building an integrated supply chain, which goes from pentoxide production, electrolyte manufacturing, to BESS or battery implementation. And we talk about market to mine strategy. It is a strategy to pull the development and the growth of the electrolyte and the pentoxide through. So growing and understanding our market and bringing that demand through. So obviously we needed to understand what the supply chain looked like when we were looking at delivering a BESS solution. I'm not going to go through the detail here, but we've certainly assessed the supply chain, understand the partnerships that are required all the way through from customer engagement to scoping study in terms of consulting assessment, all the way through down to EPC delivery, hardware, securing the hardware, the software, and the operations and maintenance. So we are doing that through our own internal capability, but also through partnerships with groups that have that specific technology and capability for us to deliver that in a sustainable way. What I'd like to take you to the next is just some sort of, I suppose, unit economics here, a little bit of how do you actually look at pricing and delivering battery energy or battery installations. Just a little bit of a case study on the left there. You can see what we've looked at around in terms of the capital cost, install capital cost. So that's the upfront design scoping study, the procurement and install of that battery, which includes the dry battery and the electrolyte. How do you generate cash as a result, or generate returns out of that particular model? Well, you can do it in a number of ways. The very simplest way is essentially an asset sale, where CMG would, from a consulting basis, look at the from a margin, the procurement and delivery and install of a battery as an asset and generate a margin out of just the asset. There could be a model where, working with a financier, the asset is owned by CMG and there's a rental or a lease arrangement. So there is a number of options that we are modelling and see as opportunities, and really dependent on the customer and how they'd like to see that occur. Moving on to the vanadium electrolyte, which is very much underway at the moment. You'll see down in the screen the warehouse that we've secured. It's quite a large warehouse, big footprint, and capable of actually expanding our 1 million litre facility. Again, market demand driven, up to 5 or even 6, 7 times larger than what it's currently there. We're currently in the feed stage, which is the early design stage, which defines the footprint, what it is. We've secured the technology provider, so that's very much underway. We see that being commissioned at the end of this year, with steady state occurring in 2026. And we've already started to talk to battery manufacturers and our own internal sort of capability to secure sales and some offtake of that battery. Roughly, approximately, again, this is a market that will be determined as we're sort of securing on actual sales, but we see once we're in steady state, that $5 to $7 million turnover for a 1 million litre facility. And again, with growth, you're going to grow that to a proportion or linear basis. A little bit more of a 12-month development plan. Again, I won't go through the finer detail, but as part of what we're doing now, we are working closely with hardware battery manufacturers such as Invinity, Sumitomo, CellCube, H2, VFlow, to name a few. They are all looking at the supply and obviously talking to us about what capability we have, the production profile we'll have, and looking to secure that into the future. We are looking at the market, which is obviously very much being informed by the work we're doing downstream in the BESS implementation, talking to customers. So that will inform the planning process for our expansion into the future. And again, I will come back to that point. It will be very much demand driven. Coming back to that point I made earlier on around the growth in our electrolyte manufacturing will come from the market demand we're seeing for implementation of batteries, which is again a risk mitigation, and also implementing cash and capital into growth in a structured way that is demand driven. So just in a phase basis and a few little metrics here. In 2025, we see the operations sort of being commissioned at the end of the year. Phase 2 is a steady state production that we will see the business sort of reach its operational capacity of 1 million litres and generate that return. You can see there's a healthy margin from what we've been modelling. Phase 3 would be an expansion profile. Again, the timing will be dependent on the market, but could be in a sort of a 2 to 3 year window. And then beyond that, the expansion we see, and again, this is blue sky, but expansion beyond Australia into US and Europe markets. I want to come back to the very start, which is the upstream part of the business, and I just draw your attention to the picture on the right. That has evolved, and essentially that plan is defining our mine plan, which is well progressed. It's defining our footprint, which is well progressed, and that is what we've been submitting in our coordinated project and our EPBC applications. And so it is well progressed. The studies are very much on foot at the moment, and they are the studies required for our EIS to submit that later in this year, and they're all progressing really well. The resources have been defined, but I think what we're most excited about is the pilot plant and the flow sheet that we've developed. We have an efficient flow sheet, as you know, through our scoping study. And the flow with the work we've been doing in this technology is exceptional. The team has done a great amount of work to de-risk this and take some of those key components, such as the reagents, and really de-risking that away from, in this particular case, there's a lot of leaching, which requires acid. We've been able to come up with a flow sheet that doesn't require those huge volumes of acid, which is absolutely terrific from a project risk perspective. So an upstream development plan for the Linfield project. 2025 is a year of completing the studies, submitting the environmental impact statement. 2026 and 27 we see an approval process, again with a coordinated process with the state. They chaperone and support your development through the various various departments that are assessing your studies. So that will enable a sort of a tighter timeline for us to achieve the approval. 2027 and 28, again, we see that as being a period of design and sort of procurement and construction of the facility into 29, that is. So we're planning on the commissioning into 29 and late 29 into 30, the operations commencing in a more steady state basis and production of pentoxide. So again, the studies you'll see come out this year will give you a better definition of what we see the infrastructure to be, the size, the production profile, and the cost profile, economics behind that. And we'll let you know in due course as that arrives. Again, some metrics and margin that you would have seen in previous, but strong margins coming out of the business that we can see through the studies. Hopefully, will improve the basically through the flow sheet. Recovery is a generator of better margins in the business, and we're really focusing on the operating costs, the risk profile around reagents, and also the capital costs to ensure we're pitching this at the right mark. So we have an integrated business model here. Sorry to jump around. Again, you've seen that slide. I just want to take you through a case study. And this is a case study into the future where we have a completely installed supply chain. And this shows the ability for CMG to internalize margins throughout the business. It shows you the flexibility that an integrated supply chain can offer to a business and the enhanced returns that can be generated. So with the production of pentoxide, we see that being lower than what we can purchase it for. And again, that's the reason why we would build a mine, but we can internalize margin through the sale of pentoxide into the internal business, being the vanadium electrolyte business. The vanadium electrolyte business, again, can internalize margin through its production being cheaper than what can be purchased on market, and sell that into the BESS business, i.e. the business we're establishing to deliver vanadium batteries on ground to customers. And then with the installation of a BESS solution, a battery of, in this case, we're talking about a 2 megawatt 8-hour storage battery, which is in the order of about $16 million. We see a margin being generated, and in here we've modeled a simple asset sale. And again, approximate numbers from what we're seeing at this point in time, we can see a significant margin being generated to the business by a single asset sale of 1 2 megawatt battery. So that's how we're, I suppose, and the reason why we're delivering a fully integrated model, and we're seeing some significant returns come out of that. This is a diagrammatic of the timeline operational milestones. You'll see 2025 is again progressing each of the parts of the business, the upstream, midstream, and downstream business. The upstream being very much study basis and landing on our feasibility studies, implementing the approval process. The midstream is around construction and commissioning so that we can move into operation in 2026 for vanadium electrolyte. And the BESS downstream business is exciting. This is where we see a lot of engagement with customers occurring right now for the scoping studies around implementation of a battery potential. And we have a number of customers, and they are inclusive of mines, they're inclusive of data centers, remote communities, councils that are very interested in what the characteristics of the vanadium flow battery can offer in their community. Some highlights on the catalysts that are coming up. I've talked about these, but just a diagrammatic here. Coordinated project status, hopefully very, very soon. The MLA is being prepared and will be submitted shortly for our mining lease. Pilot plant we see finishing up with a pre-feasibility study sort of around mid-year and bankable by the end of this year. submission of the EIS and development approval again, probably in Q3, Q4 this year. And what we'll hope to do is announce as possible those customers that are keen to progress into BESS solutions, as we're engaging those over the next 6 to 9 months. So an exciting sort of period up front, lots of work the team is ready for, and it's excited about. That sees the completion of the presentation, and really just open up. Sorry, it took a little bit longer than expected, but if anyone has any questions, please jump in.
So we do have some there. The first one up, Scott, can you just go through some of the potential revenue models for vanadium energy storage?
Yeah, I look really quickly. One of the very simple one is as a project, if it's a battery install, then the revenue model is simply an asset sale. So CMG will procure and on behalf of a customer, do the initial design work, manage the EPC procurement, design procurement and install, and essentially deliver that as a project with a project margin. That's one. Another model is to essentially look at CMG owning the asset and leasing or renting that. The benefits of electrolyte being 25 years long gives you an asset that will have a long tail of generating almost an annuity for the business. They're the main two.
Cool. Just got a question here from Angela, just in regards to the rollout of vanadium batteries around the world. Can you share any notable international projects, their timing, specific applications, and any key advantages of the vanadium batteries?
Yeah, I mentioned one before. The largest one just recently built was the one in Dalian, again, China, 700 megawatt hours, massive. Probably the more notable one that's been announced in WA, which is a 50 megawatt battery, 10 hours, so 500 megawatt hour battery, a big battery for WA and Kalgoorlie. That's to power and support and really give ESG benefits, pull off the grid and give that resilience. So that's a 2028 delivery. So that's it'll take a while to get that in place. California, 2023 delivered a 226 megawatt hour battery. So these big batteries, these $200-300 million projects being implemented out there. There's lots of smaller ones that are implemented in Australia, like Yadlamalka was a 8 megawatt hour battery, and that's progressing well and generating some returns for that business.
Yeah, just got another question here from Callum. Do you see the supply chain, the full supply chain being here in Australia, reducing the cost of vanadium batteries at all?
Look, absolutely. I want to give you a case example for how that will be, and I won't name suppliers, but there was a battery installed in Australia just recently. Now that battery came from the US. The componentry came from China. The electrolyte came from China. So that battery was filled up with electrolyte in China, was sent to the US for testing. If that battery didn't meet the specifications, it would be sent back to China and then back to the US until it actually satisfied it. That was put on a boat, sent to Australia, and then installed in Australia. Logistics alone will start to reduce the cost of these. Establishing a supply chain in Australia, which is, for us, example, pentoxide, Julia Creek, sent to Brisbane electrolyte, assemble a battery in Brisbane or Logan, we could foresee that happening, and then installing, in wherever that may be. Just the logistics alone will reduce the cost of the capital cost of those batteries, and ultimately the cost of storage.
Just another question here from Jonathan, just in regards to vanadium pricing. Can you share any insights on your view of future vanadium prices and electrolyte prices? And I guess if prices change significantly, how adaptable is CMG's model? Do the economics still work under the conservative estimates?
Look, I'll come to the model in a second, but look, vanadium is a commodity. At the moment, the majority of vanadium is manufactured in China. There's 2 mines or 2 suppliers. The rest, one's in South Africa and one's in Brazil. So there's not a huge supply. As you bring on or demand through vanadium flow batteries incentivizes electrolyte production and vanadium mines to come online, you'll see a supply dynamic shift, and you'll see some unsettling. So I see vanadium pricing, pentoxide pricing increasing, and as mines are incentivized, you'll see some fluctuation similar to lithium, in a way. And the same thing will happen to electrolyte, but it'll balance, and it will, generally sort of start to, see an increase over time. What we're doing through establishing a supply chain is removing ourselves from I suppose the fluctuations in a commodity price by internalizing all of our own supply, and by bringing on sort of pentoxide and electrolyte supply based on demand from the battery end. Then we're only incentivizing it to the quantities of the demand. And we see that sort of, again, stepwise reducing the overall battery costs. So I think CMG is creating a resilient model to ensure that we're not overbuilding or overcapitalizing in manufacturing capacity, whether it's a pentoxide or electrolyte. And I think that is a real bonus for us. Initially we are going to be subject to the pressures of price, and at the moment pentoxide's in a price that we can currently produce under and compete if we bring on our pentoxide mine, that's for sure. But yeah, I see long term there's be a steady price increase, but certainly something that we'll keep an eye on.
All right, I think we're sort of drawing to an end here, but one last question. Just with multiple players in the vanadium flow battery space, what sets CMG apart? Do you think it's the resource, the team, the IP, the strategy, and how will that lead to long-term value?
Look, I'm really, really excited about the model that we've put in place. We're the only pure play vanadium out there. Yes, there's other competitors, but they are diverse in HPA or various other sort of structures. We're very, I suppose, vanadium focused, and that's really driven us to get better flow sheet results out of our mine. It's that's our focus, that's driving our economics. I feel we're an early mover in the manufacture of electrolyte. We're one of three now, Veco up north and AVL bringing on something in the west, but we're an early mover. We have a great team. We've got a great dynamic in that, and I think coupled with the strategy, coupled with that really penetration downstream and understanding our customer, where the demand is pulling the business, I think that's it's a really part of, I think, that sets us apart. No one's really driving to that extent. Some others are doing sort of concepts of that, but I feel that's it's important, I suppose, set us apart for sure.
Excellent. Well, look, I think that concludes our presentation today. So thanks everyone for attending, and thanks Scott for delivering the presentation. If anyone has any further questions or would like to know more, feel free to reach out. Obviously, details from the email. So thanks for attending. Excellent.
Thanks very much. Enjoy your day, and thank you very much for joining the presentation. Appreciate it. Thanks, Stu.